Thank you for coming out today, man.
Tom, thanks for having
We
me.
have Lawrence here today, and he's with Loan Depot.
Loan Depot,
When I first met him, he was with
Family First
Family
Funding.
First, right?
That was a while ago.
Are they still in business?
They're
They
still in
changed,
they're
right?
still in business. They got acquired, but they still kept the name.
Okay.
But in 2022, I went over to Loan Depot
Right, right.
out of their Hoboken branch.
Got it. Okay. So I always like to have that first story of when we always met.
Yeah.
I know we mentioned it a little bit before when Mike was here, but I believe the first time that we met was, I think we started around the same time.
I think we started around the same time. It must have been, what do you think, 2020, 2021? Around there, right?
2021 was when I started getting my feet wet into this.
2021, I think how it started was I slid into your DMs on Instagram. Is that right?
Yeah, yeah.
I slid into your DMs. We got together for a dinner. It was Korean barbecue in Fort Lee,
Pal Park.
Pal Park, in Pal Park. And do you want to tell this part?
I'll let you tell it.
All right, so I'll tell this part. So most of the time, like especially if I'm initiating, if I'm asking you out on this date, like I should be paying.
Right.
But there was like a twist at the end. We have this nice dinner, a nice conversation about life, getting to know each other, about business, where we see our growth going.
Sure, sure.
And then you pick up the tab.
I didn't know back then. I didn't know what the etiquette was. So like when I shared that story with other realtors, they're like, "No, man, the lenders are always supposed to pay. They're the ones that are always supposed to take care of the bill." And I was like, the reason why I wanted to pick it up though was I know during that time, like the market was crazy. And I feel like realtors will always take an advantage of if there's a dinner or if there's a party or if there's some type of networking that that someone else is gonna cover. But from that perspective, I feel like it's not really building a relationship.
And you know what? That was maybe like of a handful of times where a realtor picked up the tab. I could probably count it on one hand. And that was the first time that I had, and because we started around the same time, I think that was year 1.5 in for me.
Okay.
So that was the first time a realtor had picked up the tab.
There we go.
Yeah, for forever remembered that.
I think that's what always segued us because I was like, you always get the next one. And it just took a little while to get to the next one.
Yeah.
But it's always been, we've always been in contact with each other. We've always had a similar, I think, just networking group of friends that we've always seen each other face to face. We've never really done business during that time, but we were always within proximity of each other.
Agreed. Agreed. A lot of the shared same circles. I think the next time I saw you was at the Aria Gala,
Yeah.
and we were at the same table
Right.
in 2020. When?
24? Yeah. So that was what? Basically 3 years.
Yeah. We still kept in touch via IG.
Right. And we're still in the business. That's what matters.
We're still in the business. And yeah, it was good seeing you at the Aria event. We hope to see you at more of these.
Okay. I see I'm getting pressured into
Yeah.
this thing. Right?
Yeah. We're going to have him commit right now so we have it on video.
Oh, no, no. We'll wave this off, like I said. And I'm kidding. We'll leave it in. We'll probably go into the next, 2025 Aria. What do we have? It's in November or is it in December?
It's coming up. There's going to be a change of people.
Right, right. This is change of guards.
Yeah. So Paula's coming up. She's going to be the president.
Okay.
Sue's going to be immediate past president.
Got it. Cool, cool. Good network to have. Paula's she's with Goosehead, right?
She's with Goosehead. She's awesome. I enjoy working with her.
Sure, sure. Nice. So, what did you do before you got into lending?
I've been in real estate for like quite a long time. I'd say like 15, 16 years. So starting out, I wanted to become a commercial real estate broker.
Okay.
So it was the summer before my senior year of college, and I interned at 2 rival firms at the same time, unbeknownst to each other.
Did you know though?
I knew,
Okay.
and at the end, they both knew, but
Sure.
in the middle, they didn't know.
Right.
I was working at Massey Knackle, which got acquired, and Marcus and Millichap, and I was basically under these 2 guys and learning as much as I could, and I wanted to become a commercial real estate agent.
Got it.
The year I graduated is when the banks went bust.
Okay.
And Marcus and Millichap had this program called the SIP program. And the SIP program is basically like a training program. So you could come in, you get a small salary, you work under someone else, you work on some deals, and then after a certain period of time, then you're out on your own, and then you have your own deals that you work on.
Okay.
But that program went away that same year that I graduated. So I ended up working with Israeli real estate investors in New York, and that led us to the South. So I was living in Alabama, in Mississippi, and it was for a little bit longer than I really wanted to. So like a year and a half down south, and I'm a boy from Queens.
Right. It's a huge change.
Huge change, cultural shift. So I wanted to move back to New York. So after about a year and a half of doing that, I moved back to New York, and that year was like a transitional year. I tried to figure out what I wanted to do.
Right.
So I got into wine sales because I really liked wine. I'm like, all right, I started off in real estate. I like real estate, but I'm still young. Let's try to figure it out.
Sure. What year was this with wine, so?
Wine sales, probably like 2010, 2011, 2010.
Okay.
So wine sales, I sucked at it. And you had to drink wine the whole time. And I was selling over the phone.
You're supposed to spit it out though.
We were drinking. we were drinking that wine.
Okay.
I didn't do well in that job.
I bet. Just because I understand now.
I didn't do well in that job. And then I became a not a recruiter, but a sales capacities for Kforce, a publicly traded recruiting company.
Right.
And I didn't really do particularly well in that job. Then I worked for a medical sales auction company. I did okay there, but not really my cup of tea.
Right.
So I'm like, all right, let me get back into real estate. It doesn't seem like the market's going to take off right now. Let me get into commercial property management.
Sure.
So then I worked for Hudson River Park Trust, which is a New York State park located in Manhattan. So I oversaw basically like a quarter of Manhattan's waterfront.
Wow.
So I'm from 59th Street all the way down to Battery Park City. I was the property manager for.
How'd you like that?
I like that a lot. I often think back to that job. It was on the water. We were young. It was very fun.
It was a good time, actually, around that time in the city.
I didn't make that much money. That was the thing. So then after that, I managed 2 office buildings in the financial district, Class A, 1 million square feet. That wasn't really my cup of tea either.
Why not?
There were certain things that were done that I wouldn't have done it that way. I don't really want to go into the details.
No worries.
But there were things that were being done that I wouldn't have done it that way, and I didn't agree with. And that's part of the reason why I left.
Got it.
At the same time, Con Ed was knocking on my door, and I went to work for Con Ed. So I worked for Con Ed from, when was it? 2016 to beginning of this year.
Oh, wow.
To beginning of this year. And then in February of this year, I went full-time as a mortgage loan officer.
Got it.
So for the first 4 years of my loan officer career, I was working a full-time W-2 job.
Peddling energy. Okay.
And trying to balance the two as best as possible.
I never knew that. It's because you've always been engaged and you've always been on top of it, that it's not like you're putting that to the side and just getting it to whenever you needed to, I guess, when you had a moment.
Yeah. It was in October 2024. Like a few days after my daughter was born, we were home. I was thinking to myself, I can't do this anymore.
You got another job. You just got a daughter.
I can't do this anymore. Meaning, I have to pick one.
Sure.
And obviously, I picked to become a full-time mortgage loan originator.
Got it. What was the deciding factors between, I guess, choosing one of the careers?
Sure. I fast forwarded myself to 80 years old on my deathbed.
Got it.
Thinking, all right. And back then last year I was 38. So at 38, what if? What if I didn't take that leap of faith and go for uncertainty, but also have uncapped income and really see what I'm capable of?
Sure.
Would I regret that?
Right.
And the answer was yes, I was going to regret that. So in February, I took that leap of faith and didn't look back, and everything's been very, very good. Challenges at times, but fruitful at the end.
For sure. Was that, if you don't mind sharing,
Sure.
the Con Ed salary, was it a 6-figure salary?
Yeah, it was.
So you gave up a 6-figure salary.
6 figures, benefits, bonus.
Big. Like I think the benefits part of it is a huge player, or like determining factor of, just the familial status of what we're trying to achieve.
Yeah, some people called me nuts. When you share this with people, you share this with family and friends, and most people aren't risk takers. They're not like me and you, right?
Right.
They're going to think, okay, you have a great thing there. Why would you leave that? But it wasn't great. It was good, but I'm much happier now.
Yeah. Were you working from home, or were you working?
It was a hybrid schedule, so
Okay.
I was commuting to the city 3 days out of the week.
Wow. I would have never thought of it. It's crazy.
During those 4 years, I had systems in place.
Sure.
I had also people in the background that would help me out. And I still have those same people right now.
Right. It's all about the relationships that you built.
Yeah.
For property management, I never knew that you were in property management. And I think the last guest that we had was Danny. He was also in property management. I do some property management as well, and it fucking sucks. So like, I just want to have your take on it. Like I'm not sure which responsibilities you had during that time, or like what you've built out, but like I always see it, everyone's like, oh, like either if you're managing your own properties or managing someone else's properties, it's like, oh, it's like passive income. It's so easy. I'm like, no, like it's more than a full-time job. Like they're hitting you up at all different hours, depending on what the situation is. And you always got to be ready. So what were some of the responsibilities on your end while you were doing that?
So while I was at Hudson River Park Trust, it was a lot of lease administration. So enforcing the lease, handling AR, accounts receivable, working on RFPs to replace tenants, and then like emergency stuff. So while I was working there, Hurricane Sandy happened, and also there was one morning where at Pier 40, so that's where our headquarters were, at Pier 40, which is also the largest parking facility in Manhattan, like 3 cars exploded.
Oh no.
So that's like the emergency stuff.
Got it. Like I know with Sandy, hopefully you didn't have like all the what is it? All the mechanicals and all the servers downstairs.
A lot of it was like, we're on the water, right?
Yeah.
So a lot of it was, let's say, 1 floor above sea level.
Okay.
But water came in.
And it came in everywhere.
Yeah.
Yeah. I remember taking a look at like newspapers and stuff like that, especially in like Jersey City. They had all their servers, they had every single thing in the basement, and that just got totally wiped out with all the flooding that happened. But did you ever find out what the cause was for the exploding cars?
I didn't.
You didn't?
I didn't. There was a fire marshal at that time who was investigating it. I I didn't follow up.
Got it.
We had an insurance department that
Okay.
probably followed up.
Sure. Oh man, that's just crazy shit.
Yeah. You like these cars melted. Like the rims melted.
Rims
It was-
melted.
Yeah.
The whole structure. You have to just have it checked out.
And then we had to have it remediated.
Yeah. It's crazy. Insane. So I guess all these things, right? How has it shaped you to where you are today? Like, not the, like, there's the professional side of it. You know, you've been in Con Ed, you've been doing the property management, you've been in sales and every single thing. But, like, was there anything growing up, or was there anything that shaped you, I guess, earlier on to help you make a decision like what you did this past year?
I think each one of the experiences, each one of the work experience helped me build certain skill sets, but also helped me figure out what I don't want to do, right? I'm sure you had similar experiences
Yeah.
in your career path. Like, I don't want to do that anymore. I don't want to do this anymore. I don't want to deal with these types of office politics or these types of bureaucracies.
Right.
I just want to do my own thing.
Mm.
So this was an excellent opportunity to do my own thing and also get rid of all those those office politics, the office baggage, those bureaucracies are all out the window because everybody in our line of work is on the same mission. Let's close the deal and let's get paid.
Right. I think a lot of the times it kind of evens out the playing field, right? And you'll see who the real producers are. You'll see who the ones who's actually in it for the long term. Because I think everybody was in real estate back in 2020, 2021, 2022. And I think 23 was when the rates started jumping. So that's when it was like the exodus or like the make or break.
Yeah, that's when a lot of realtors and loan officers exited.
Yeah. And I feel like even right now, it's like, it's at that point too. Like 24, it got a little bit easier. 25, I would say it's kind of like a continuation of 24, but it's like the people, I feel a lot of people that haven't built a brand or haven't built out the relationships, they're struggling, especially with, market shifting a little bit. It's not like you could post a house on like Tuesday and have it sold on like Thursday, right?
Yeah, agreed. And especially at the higher price points, there's just fewer buyers for those.
And you have the new whatchamacallit, the mansion tax getting the responsibility shifted on the sellers now. So it's like, all right, cool. How does this change? How does this change the business on that? And when I heard that, I was like, oh, it's just going to raise prices by 3.5% based on whatever price point you're at.
It's going to be baked in.
It is.
The market's going to adjust. The market's smart, and it's going to be instant.
Yeah. So, I think you got into lending when rates were at 3.5%?
Lower. Lower.
1%.
In the twos.
Right.
And then at that point in time, like, you
was
could just
insane.
refi all your friends.
It was insane.
Like my first year, I just did a bunch of refis for friends and family.
Right. And, the rates started jumping up a little bit. Everybody started to feel the heat. I think one of the things that I mentioned was when I saw that the real estate market was going bananas, right? Like 21, 22. All the realtors, they were just buying like G-Wagons and like spending, $50,000 or $100,000 over asking on a car. But it reminded me a lot of 2004, 2005 before the crisis hit. And then I'm just like, yeah, they were spending like crazy. We were just buying every single thing. And at that time, the most Ferraris or like the most like supercars on sale or on the road was 2009, 2010, 2011, when everybody lost their shirts. right? So I'm just saying, I was like, no, like you should pad your pockets a little bit right now because there's going to become a time where it's not gravy like this. And when that time hits, that's when you have an opportunity to get in, right? Get all the stuff that you want. It's like, if you look at car prices right now, it's like 10,000 under MSRP because they just can't sell them.
Yeah. Days on market.
Yeah. So it's just like, buy it now. You would have gotten it for like 60% off versus what, the prices were prior. And I feel like when it comes to that lending portion of it, because I was getting hit up by everyone that I knew. We got to get a house now. I'm just like, okay, cool. Like this is awesome. We never had a market like this. Everybody wanted a house, and everybody was going crazy, like just putting in bidding wars and whatnot for it. That I think it took a little bit to kind of come down to earth on that. Where my biggest fear when I saw the market skyrocketing like that was like, oh crap, there's going to be huge like correction. But then as I got into it, I was like, oh, it's more of an inventory issue than more than anything else. So it's more of a supply and demand versus just everybody just going crazy and just trying to buy this thing that they can't afford. Because I think at that rate, you can afford it to a certain level, right? But then I think where we're heading into now, rates have jumped. There were a lot of arms that were taken out. Like, where do you think the market's going to go from here? Where is the market today, actually?
Can we take a step back?
Yeah.
So back when you said, hey, everybody and their mama is hitting you up to, I guess, make offers on homes and they were going way over, there was that slight lag period. I don't know if you remember this, where the comps weren't there yet.
Right.
And it was just like 1 to 2 months and we just needed the comps to catch up. But that 1 to 2 months where if someone waived appraisal, they were getting caught up on that. But then after that lag period, after the comps caught up, like the closings happened and then they caught up, then those issues went away. Where do I see the market right now? I see a lot of properties sitting on the market. I don't think everywhere. I think it's based on county and location and property condition. But there's more and more properties that I see sitting on the market, price reductions. I think part of it is seller expectation. I think they should listen to their listing agents.
Right.
I think a lot of it is marketing. So if there's a certain price cutoff point, just go below that. And you know this better than anybody else. Go below that, get more eyeballs, get more foot traffic in there, and then
hope for the best that you hit that mark.
Yeah. And then the bidding activity will come in and then get to where you want it to be, right? Where do I see it going next year? Jerome Powell's stepping down at the end of May. His term is up. Trump's going to put someone that's going to be very favorable for the federal funds rate because his overarching goal is to refinance the national debt. As a byproduct of all of that, we're going to get cheaper mortgage rates. Right. Cheaper mortgage rates. I think everybody and their mama, they're going to hit you up again. And they're going to hit you up. They're going to want to buy property. We're going to work on a lot of pre-approvals. People's buying power will go up.
Right.
So what we saw a few years ago where people were going over ask on properties, I think we're going to see a lot of that coming up in the next 12 to 18 months.
You talk about the appraisal, like the lagging behind it, right? It's like you need to get at least 6 to 9 months of comps to like get a foothold in terms of what the market's kind of going for per square foot or whatever the per number of bedrooms or bathrooms, right? Would you say that it's better to purchase knowing that there's a lag, right? That sometimes with fall prices, usually there's more reductions during the fall, historically, just because, it's not really a huge buyer's market in terms of you don't have as many people or as many people coming through the door to place these offers. Or so would it be better to purchase with, I guess, more favorable lending terms in the fall versus spring?
I think if we look historically, there's always less spring and summer are going to be the most heavy buyer activity, right?
Yeah.
So you're going to have more competition out there. If they're buying in the winter, open houses in the winter probably have less people, less competition. So it really depends on the buyer and what their needs are. If they need to buy right then and there, then buy right then and there.
Right.
If you are looking for the best interest rate, and you'll probably be waiting forever. If you're looking to buy when there's less competition, it's probably going to be the winter. But people are getting smarter. There's going to be content floating out here just like this,
right,
that somebody else has posted. Hey, buy during the winter. There's going to be less competition.
Right.
And that's when you'll have the more busy open houses maybe.
Yeah. Like, I'm curious about this year because last year when I had a couple listings come out later on in the year, and it wasn't really planned or wasn't really expected, but they're just like, oh, like, what do you think of the fall and winter market? I was like, might be a good opportunity to list at that time just because there's less inventory and there's less competition, right? So the real buyers will come out and actually purchase it. But it was crazy. Like, I didn't expect the amount of flow at that time because I think they all had the same strategy of, we got our butts kicked in spring, summer. Our realtor told us fall and winter, that's when inventory is going to be less competitive and you'll get the house that you want.
But they also were going through training in the spring and the summer by getting their butts kicked.
Right.
So they're probably making their best offers now during the fall and the winter.
Right. That's what I felt. I was like, this is kind of crazy. Like, I didn't expect, to have, 60 people at the open house or whatever it is come out with multiple offers. It felt like that 2022 kind of period of like, oh, we listed it on Thursday, and by Tuesday we're already calling, already calling for highest and best.
I also think it has to do with the counties that you work in.
Sure.
So which county do you work in most often?
Bergen.
Bergen's probably one of the hottest counties in North Jersey right now.
Yeah.
Every property is going over ask.
For the most part. I would say, I think there's been a bigger influx, especially within Northern Jersey, closer to transportation going into the city, since a lot of people are getting called back into office. So I've been seeing a lot of people, they're like, oh, we need to have public transportation close by or somewhat within vicinity that we could get in and out of. I was like, oh, so like, what's your work schedule now? They're like, they're calling us back into the office. So I was like, okay, now I see more demand for someone that wants like a single family house or like a 2-family or whatever it is. But they're like, we need to have public transportation like right then and there. Are you seeing a lot more refis coming into your pipeline?
Yeah, we picked up a bunch of refis
in
the last 2 weeks, and we're continuously analyzing them for past closed clients to identify opportunities for them. That makes sense. And when I say makes sense, the break even in terms of fees over the amount saved per month has to be a couple of months.
Right.
Like, let's say anything under like 7 months is worth looking at. Anything under 4 months is a slam dunk and should be taken seriously.
So I guess with the refis that you've been doing recently, with, I think, what, rates came down 1/4 point?
So the 1/4 point was the Fed reduction to the Fed funds rate.
Right.
Pricing improved significantly.
Okay.
So if we look back a couple of weeks ago, we were like pretty close to 7, 6.6 for a while, 6.7, 6.8, 6.9. And it was very comfortable in that range, in the like mid to high 6. And now we're in like the low 6.
Okay. Nice.
And in some cases, like mid 5s. Like jumbo people, if you take on an arm, are in the mid 5s.
And what qualifies a jumbo loan?
Any loan that's greater than 807,
Okay.
807K.
So majority of the
The majority of your clients in Bergen County, for sure.
Okay. So I wanna what's the biggest, I guess, for the people that have refied with you recently, what has been maybe like the biggest uh percentage drop in terms of where they were previously to where they are today?
None of them are super big.
Mm,
This is a concept and strategy that I call take our wins now.
okay.
So if we can refinance right now and our break even is, let's say, 4 months, month 5, you're saving money.
Right.
If we're refinancing, let's say, again in the second half of next year, if rates come down again, we'll do it again. And then you'll break even in a couple of months again.
Mm,
So we're constantly looking to identify moves that are not crazy jumps like, oh, I'm going to save $1,000 a month.
sure.
But if we could save $500, $600, $700 a month, let's take our wins now.
Yeah, yeah. And I guess with that, I think the biggest thing was like a bunch of real estate people or like real estate coaches were like, "Oh, date the rate, but like marry the house," right?
Yeah.
And I think when rates were jumping, there were so many programs that came out to try to alleviate the purchasing, right? It's like, oh, I can't afford like an 8% mortgage, but there's like all these buy down programs or whatever it is, 3-2-1s, whatever it is. Um, we'll give you a free refinance or credit towards like a refinance or whatever it is when needed. Are those programs still out there?
They're always out there. So Loan Depot has a lifetime client guarantee program, which waives the origination fee for any existing client. So if you bought your primary residence or your investment property, when you want to refinance, and this is for the lifetime of your loan, as long as you're the same borrower and the property is still the same address, then we're going to waive that origination fee.
Nice.
So that's always there.
Okay.
The buy downs are still available. I think people have gotten used to this interest rate.
Mm,
They've gotten used to something that starts with a 6. They've gotten used to something that starts with a 7. Now, like, as rates come down, they're getting more comfortable with a 5 or a
Right.
6. So the buy downs aren't being pushed as hard, but when that rate started with a 7, people were not comfortable with that.
Right.
And that's when the buy downs were coming in heavy.
Yeah, yeah. I remember when I started seeing, like, I think there was one buyer that I was helping. That's when the rates started climbing, and then I'm just like 8%, man. This is like, everyone's like, it's norm, it's prime. I'm just like, damn, 8% compared to where we were previously. That's where like a little bit of fear kicked in of like, okay, so all the people that have arms that got in at like 4% now are gonna see like a significant jump on their payments. But I feel like there's been a lot of capping or a lot of regulation to so that they don't get harmed as badly as they did back in like 2008, 2009, right?
I think they'll have enough runway. So these people that took on arms, they probably have like a 5 or a 7 or a 10-year arm. So they have enough runway to keep that rate at the initial rate. And probably within the next I say 12 months to 24 months, they'll have an opportunity to refinance into a fixed rate program. And it might not start with a 4, but probably somewhere in the 5s, and they'll be comfortable with that.
Okay. Good to know.
Yeah.
Hit up Lawrence. So what is the origination fee typically like?
It varies by bank.
Okay.
Ours is in New Jersey, $1,590. It's one flat fee, and that's our only fee that we collect for us.
Got it.
There's other fees that go into doing a mortgage.
Okay.
Those are third-party fees.
Sure.
So there's going to be like title fees, flood certification fee, tax certification fees. Those are all third-party fees, but the only fee that we at Loan Depot collect is the origination fee, which is $1,590.
So if you keep on refinancing without the origination fees, like how does Loan Depot? Is it the long-term game based on that promise?
We want to continue servicing that client. So basically, it's a company-wide decision to make less money on all of our current clients' refinances. So they go into a different bucket. We have different pricing for these clients.
Sure.
We're not adding on. We're just taking away.
Got it. So you could save $1,590
every time if you refinance through us. Yeah. So let's say if it's a client who's shopping and it's Bank A and Loan Depot and we're neck and neck, all terms the same, on the future refinance we're going to make out.
Right. Oh, I didn't know that.
You didn't know that?
You should, because I know that they were like, oh, we won't like charge you for the next time, right? But to have it for a lifetime kind of thing,
it's lifetime, yeah.
That's a game changer. Actually,
as long as the borrowers are still the same,
the property is the same,
Thomas
right?
Lee, and the property is 123 Main Street, then yeah, it'll work.
Okay, good to know, man.
Yeah.
You know, where do you see your, I guess, values or your spiritual or your family come into how you go about your day in business and in life?
So I think everything, you know this, right? Everything changes once we are responsible for somebody else. This little person is going to need us, right? So you're a father, I'm a father. And my life changed after becoming a father. I'm no longer, it's just about me. I'm going to do whatever I want when I want. Now we're just focused on the family. But the family values and my spiritual values permeate into my business world. If I wouldn't recommend it to a family member or do it myself, I wouldn't recommend it to a client.
And what are maybe 2 or 3 of those values or learnings or I guess just the way you go about it that you would be able to share?
If the client has more than one financing option, I'll present the multiple options. Like just this morning, this guy named Michael, he bought a condo in Jersey City. Said, hey, Lawrence, I want to go through some refinance options. I said, okay, I'll present 3 options and I'm going to recommend one, but you take your pick, whichever one you want. So we looked at a 15-year, a 7-year ARM, and a 30-year fixed. And I said, okay, this is the strategy. Take on the ARM because you're going to have a 7-year runway to refinance. The rate was significantly lower than the 30-year. It was a little bit higher than the 15-year,
okay.
But with the ARM, it amortizes over 30 years, so you have the flexibility in terms of payment. If you want to pay more, pay more.
And I guess how do you, when it comes to the refinancing of like commercial properties or like secondary properties, like investment properties, like how can you help out in that way?
We're doing a lot more DSCR deals now.
Okay.
So where, let's say somebody who owns multiple properties and they've gotten smart with their taxes, so they're not going to be able to qualify, let's say, for conventional financing.
Sure.
We've been doing a lot more debt service coverage ratio loans.
Got it. So when you're saying like smart, you're saying
they're taking full advantage of.
They're taking full advantage, or their income is not fully supporting a conventional route. In a way.
They're doing everything within the legal confines of the IRS guidelines.
Sure.
Probably with the advice and counsel of their CPA.
Yeah.
To reduce their tax liabilities.
Yeah.
Definitely doing it in the right way. But when we look at it as a lender, some of these properties on their Schedule E's are taking losses, which will show negative income.
Sure. Which is like a red flag for every lender.
If they have a super high income, then it doesn't really matter. Okay. But if the debt to income ratio is going to be tight, that's going to impact it.
Got it. Because like that's I feel like a lot of investors or a lot of people that want to get into the investing portion of it, like I've been hit up a lot lately. They're like, "Oh, it's coming to like year end. We're gonna pay a boatload in taxes. Like, I need a property.
Hmm.
Tom, find it." Like, so I feel like a DSCR is kind of like the program that will help them if they, don't have that W-2 or if they're self-employed and whatnot. Um, what are those rates kind of looking like?
They're pretty good, actually. They're pretty good. So Loan Depot has DSCR programs. We also have investor outlets for DSCR programs. And based on the investor's profile and how they're collecting rent, then we might go in-house versus go to an investor.
Mhm.
But the rates are good.
Okay.
Rates are in the sixes right now. So I'm doing right now a cash out refinance, 60% LTV. Credit is good. So the credit's over 780 on this client. We're at 6.5%.
What's the maximum LTV that you'll go up to?
Those DSCRs, they like to be max at 70, 75.
Good to know.
Correction. There's one investor now that'll go up to 85%.
Oh,
There's there's going to be an adjustment in the interest rate, obviously.
sure. Of course.
They're taking on more
they're
risk.
taking on more risk, but at least it gives you the leverage needed if you need it,
Yeah.
to get some funds back from
Yeah.
what was invested. I'm learning a lot.
That one's a new investor, but I've worked with that account executive when he was at another shop.
Got it. So is it just residential that you do, or is it both commercial as well?
I just added on a commercial division.
Mm,
So this is outside of Loan Depot.
okay,
This is all new to me,
sure.
but it's exciting and I'm looking forward to working on new challenges.
You're back in commercial real estate.
I'm back in commercial real estate. I'm under the tutelage and guidance of one of my friends, one of my childhood friends. We've been friends since we were 6 years old, 7 years old.
It's amazing.
He is a managing director at a very large shop in the city, and their annual volume is about $1 billion.
Oh,
So he's working on much bigger deals, like $100 million, $200 million deals. And here I am calling him for like $1 to $2 million deals. And he's giving me full access.
Right. I think at that price point, it's the same. It's just the numbers are different, right? It's like, oh, it's the same process for the most part. There's going to be the same hiccups. Some will be cleaned up a bit more once you get to like the bigger numbers. But it's great that you have the accessibility and that you have the transparency behind it to see how everything's formulated. Brings me back to when I first got out of college, and my first job was with a private commercial lender doing hard money loans. And
See, I didn't know this side about you.
that gave me, I hated it. I hated working for them. I hated, the whole bureaucracy with the office setting and whatnot. But I learned a ton. And when I see like LTVs or like when, lenders are speaking financial languages and stuff like that, I was like, oh, it's like a recap of like going back into that time. But I think with the hard money loans, a lot of it was in the South and the Midwest. Because I think at that time it was still within the boom. So there was a lot of lending still going out to uh, Nevada, Arizona, Texas. There was a lot of opportunity down in the South because I think that's when Katrina hit. And they were trying to build as much property, or they were they got all these government contracts to try to build all these things that conventional financing did not understand or would not touch. And they're like, oh, we have to go private with this. And then I was like, oh, okay. Like there's very interesting categories within real estate with that. And I guess that's kind of what always stuck with me was there's always an opportunity regardless of what it is. I know like for the most part we focus in on residential, but there's such a plethora of opportunity once it comes outside of that. Like the main thing coming into this thing was building wealth for my family, friends, and clients through real estate, just as a vehicle. Um, and luckily, we've been able to do it. You know, um, slowly building out the portfolio, slowly building out the next steps and what it looks like. It's not overnight. It's not what these gurus say of like you'll get 300 doors like tomorrow. You can, but it's you're not the one that's in control of it.
Right.
Right. So it's mostly like the whatchamacallit, the syndicates and whatnot that they push the programs or whatever investment that it's for, that you can't really verify who the major players are in there. But yeah, that's why when I was like, oh, commercial lending, huh? Lawrence does it. Kind of have a little bit of a background in it, but not like the conventional side of it. But yeah, I think that's kind of where we connected. I think when we first had dinner and whatnot, just trying to figure out why we're in this game.
Back to that dinner. I think you had just come from like a Tony Robbins event.
Probably. Yeah.
Are you still going to those? And what are those like?
I haven't been to one. I think that one was done virtually. But like I think we went through my personal growth journey back in like the late 2017. I think that was the year. And that was a year of pain. That's what I learned is you have to do all the unlearnings of everything that's helped you this far and kind of learn the new learnings of what the next steps to take you to the next life or level, right? And I think that's what it's been in terms of I think for me it was that 1 year of like intensive. Like I went to every single like seminar or whatever it was. But I think the biggest thing is when it comes to the personal development journey, it's you can't lean too much on that one person because you'll hold them like a crutch. And you'll always go back just because you want the sense of support or you want just validation. And a lot of people that go to like those kind of seminars are high level. But the thing is, I find a lot of them insecure because they're all trying to validate themselves either through what they've accomplished, what they do, and they haven't found who they are. So it's always that cycle that you'll see a lot of patterns on. But I think once you get out of it and really take the learnings of what they're trying to teach you of like, you have to do it. You just can't, you just can't learn it from a book. You just can't learn it from my stories. Like your personal journey is your personal journey. And the best thing is I'm just providing you with some guidelines. And I think from there, it's like fatherhood opened up, marriage opened up, every single thing that came into it, business opened up. And I think at that time, I was in the family business and business was going down. So it came to, I think the analogy that they call it is, do you want to catch falling knives? Right? And essentially that's what the business was. It was the whole legacy behind it. My parents built it up. We were second generation, my brother and I, leading the next frontier of the business. But I was just like, these numbers don't make sense. Way too much overhead. And I don't see the industry going past the next 5-10 years, especially the way that we're going.
And for those of us who don't know, what kind of business or what kind of industry was the family business?
It was when I came in, it was fashion jewelry. But the way that it started out is it was my parents selling souvenirs in New York City. Then it went to t-shirts, and then somehow it went into fashion jewelry, all within one location, just over a period of time. But I feel for that time, it's like it's the same thing with you making a decision on your career. It's like, what's the next thing that do I really want to make the next jump? And to really face that fear, it's the biggest hurdle. Nobody talks about it. Everybody doubts you. They talk shit about you. They think you're out of your mind. And I got the same thing. I got flack from my father. He was like,
It's usually the people closest to you.
you ruined the family legacy. And I was like, I know you're saying that, but the thing is, I know that this is the right decision. And that was that year of the personal development of like, you can't just hold on to something just because it might be a legacy, right? What is the next correct step so that you could still see the vision, you could see what you're still going for, but it's not always going to be clear cut in terms of like, and pretty roses of like, cool, this business is going to blow up and we're going to just go on to the next one, right? It's always the hills, the valleys and the mountains. But as long as you're constantly going up, you could have 2 years of setback. 1 year could make it all back. 3 years of shit, and then 6 months of good stuff, right? I think that's where it takes a lot of endurance. It takes a lot of perseverance for that entrepreneur journey. Especially even if you're in sales, whatever it is, whatever you kill that day is what you eat. And for a lot of people, it's like, well, I could eat every day, it might, and it might be okay just, not taking those risks. And I understand that. I understand that portion of it too.
It's not for everyone.
It's not. But the people that you do it with, I think is the biggest thing, right? Because entrepreneurship is the loneliest journey because you have to find the people that understand you, that are on the same path, that want to go the same way. And I feel like that's what we've been building. It's been building that I always built the business off of relationship, transparency, relationship, honesty, and being congruent in terms of the way that you do it. So if there's a referral going out, I'm making sure that either I use them or someone that I know really personally that used them so that I could recommend them. Because it goes both ways. They represent you and you also represent them.
100%.
And, that's, I think, what it took 3.5 years for us to get our first deal done.
Well, we got our first deal done. First of many.
We got Alex and Cindy their first home. And it was, to be honest, it was one of the most seamless transactions that I had from the lending side of it.
You say that, but then there was challenges throughout the entire process.
There were challenges with it, but like there's so many times, like I think early on, there were so many different lenders that we were working with and whatnot that I think they were kind of learning the game as well. But like I said, when we recommend a lender or recommend anyone that's going to be part of that transaction, you want to make sure that it's a smooth transaction going throughout. And there would be instances of where the lenders or someone within there, it would go smoothly, and then the last 2 days it would just go to crap. And then it would just be, I feel bad that I recommended that person to the client, even though they might have had great terms, great rates, whatever. But I'm just like, it was the sloppiest, like, it was not the smoothest landing.
I remember during this transaction, I would call you at times and you would be like bracing yourself like, okay, what now?
It's the trauma. It's all the bullshit that we had to go through. But, I think you understand who the real players are the longer you are in the game. And then it's like, cool. Now I know, like, it's like, You just make sure that you do your stuff. I'll do my stuff, and just make sure that at the end of the day, everything aligns and we're good to go.
We're all on the same mission here. Real estate's a team sport. There's you, real estate agent, me, the lender. There's an attorney, home inspector, title company. It's a team sport.
We just hit so many roadblocks with that, but we managed to get through it.
Overall smooth. And when we look back, no major issues. And the clients were also understanding and easy to talk to and committed to buying that house.
Yeah, I think that's the biggest thing was they were committed to buying it. Like there's so many instances where they just lose interest that the emotions start to overrun it. But I'm truly happy that they were committed. Not because we got to benefit by getting paid at the end, but just to see the happiness and the smile on their faces when we were both at the closing table.
Yeah, at that closing table, they didn't even tell anybody in their closest circle.
Yeah,
until after they left that office.
That was the crazy part. We were the one. We became actually like their closest confidants for that.
Yeah.
And it's insane. I was like, wait, you didn't tell anyone? They're like, oh, we're going to tell mom.
Yeah. Did you even tell mom? No, we didn't tell mom yet.
Or like, we're just going to bring mom and just let her know that this is our house now. And that's it. It always brings like the butterfly feelings back of like why we do what we do. Because we get to help out families, not only with their next house, but it's such a big decision that we help them out with that, we want to be there for life with them.
Yeah. Every client that we take on is a client for life.
Yeah. So what's next?
What, today?
What's next for you?
In general?
Are you going to be building out teams? Are you going to be?
That's a good question. I think for next year, my goal is to grow 100%. And then in maybe the second half of 26, early 27, make my first strategic hire and then start building a team.
Nice.
And what about you?
The more that I look at the real estate business, the reason why I got into it was I hated managing people. I was like, this is my solo mission. I'm good, but
you're also a mentor to new agents.
I do it, but do I enjoy it? Not fully. Like I think when I speak to a lot of real estate agents that have teams or that made their own brokerages and whatnot, they're like, Tom, really think about it. It's insanity. But if you have the right systems in place and build it out and, have the right people behind you, then it could be very fruitful. I think we're 5 years into it. Yeah, I think, you can't do everything now. Right? That's what I learned. It's like, oh, we'll go to Avenel, we'll go to Morristown, we'll go to Mountain Creek, all in one day. Like we'll start at 7 a.m. and we'll come back like 9 p.m. Like I'd rather spend more time with family.
Yeah, and most of these, when you're doing a full day like that, it's going to be a Saturday or a Sunday, right?
Saturday, Sunday. Then you're running comps for them afterwards. Then they don't want to put in an offer after you put in the comps and everything, every single thing. So it's like, how do you, coming into more of like, I believe the more matured role of it, right? It's like, okay, like how do I value my time? What is the things that move the needle the most? And who are the people that can work together to achieve it?
Just talking through that day, you're driving around, you're showing properties, then you're running comps. And then after you run the comps, then the buyer may or may not make the offer. What if we ran some initial comps before, or like put together like an estimated purchase price, ran the numbers to show a monthly payment, based on a down payment that they pick and estimated cash to close. That way it could potentially save you some time. So instead of checking out all of those properties, if property, let's say number 1 and number 7 didn't make sense, then you could shave off 2.
Sure. No, it makes total sense. That's why I always ask you before we go out. Cool. What's their monthly payment gonna look like on these properties, right? Because I don't want them to be over leveraged. I don't want them to stress on a house that they're going to be living in.
Yeah.
And that's like, I find that super painful. Like, it's like, I feel like I got them into a bad situation if I help them do something like that. It's like, where are you comfortable with? Where can you stretch to? But at the end of the day, it doesn't become a burden. And I see a lot of people, they're just like, oh yeah, we paid $100,000 over asking for that. And they just, I pushed them to make it close. I'm like, dude, like, do you have any regard for like what their finances look like? They're like, they could afford it. I don't know what their finances are, but they could afford it because they paid $100,000 over asking or whatever it was. I'm like, okay. And that's some of the people that's, out there serving in the industry. And it's eye-opening in a way of, cool, they might get the numbers, they might, have big numbers because of that. But, is that the way that you want to perceive the business or continue on the business? And I feel a lot of those people, they change the realtors as soon as they're getting ready to sell. So they're like, oh, like, they had no regard for like what we wanted in terms of or what we were trying to achieve. Granted, they wanted the house, cool, but did they take a look at what their actual family structure kind of looks like and what they're trying to achieve in the long term? And that's the first thing that I always ask when it comes to clients is, cool, after this, what's next? Like, what do you want to try to accomplish? And they're like, oh, I want to do this, and like, after we get the house, we want to grow the business and whatnot. It's like, cool, does this align with that? Or, do you want to have more kids? Kids are expensive. Like, do you want to put more stress on the payment of the house, or you want to put it more towards making memories with the kids? Those are the things that I always look at prior.
I think it's tough on both sides of that coin, right? Because if it's a competitive market, let's say it's in Bergen County, we know it's going to have to go over ask. If they really want it, they want to be next to the school, they want to be next to this train station.
Yeah.
We already expect and anticipate that they're going to have to go over ask.
Right.
And in this current market, it's like whoever goes over ask the most with the best terms will win.
Right.
So it's tough all around, I think. Good for sellers, but tough
it's amazing for
sellers.
sellers. What early on has helped you in business and in life that is attributed to where you are today?
I can't think of anything like early on, but when you ask that question, the first thing that pops into my head is when I was working with those Israeli real estate investors in New York, was finish what you started. Even if it's something super simple, if it's like a chore, because you'll have the satisfaction of accomplishing or finishing that and accomplishing whatever that task was. They're just going to go on to whatever the next task is and take it from 0 to 100%. Instead of taking it from 0 to 97, 98, or 99% and then just not finishing it.
Right.
It's just, all right, let's finish it out. Let's move on to the next thing.
Was it always like 100% finished out? In terms of like effort or like...
For me, before working with that person, I would often go to like, let's say 90 or 95%. Just like, all right, we'll figure out the rest later, right? But after working with that person and from that person, like constantly driving me to finish to 100%, that's something that I think about often and every day.
It's such a good attribute to have, or a great learning to finish what you start.
Yeah.
Right. And to do it before you go on to the next task.
Yeah.
And I think that's the hardest thing, especially when we have so many distractions today, or like there's so many ways, like, oh, there's another way to finish it. There's another way to finish it, whatever. But I think just getting it done, it doesn't have to be, you know, off the wall results. But I think just getting it done and just going on to the next thing, I think is the most important piece of it.
I think Mike said it before he left the room. It's like, done doesn't have to be perfect.
Right. You said it best. So, where can people find you?
People could find me on Instagram
Okay.
at Mr. Mortgage Pro. They can find me at my website. Just Google me, Lawrence Zhou at Loan Depot.
Got it. We'll put all that in the captions, and we'll get all the information there. And I think the best way to get in contact with Lawrence would be have him ask you out to a meal.
Does it have to be in Pal Park?
It doesn't
Does
have
it have
to be
to be
in Pal
Asian?
Park. No, but you have to pay though.
I have to pay. Okay, I can do that.